Welcome to How's the Market Hawaii. I think everyone nowadays is asking the same question, how's the market? And that can be interpreted into many different ways in many different industries. And so I wanted to bring some of my friends along to talk about the market in their respective industries as well. So I'm Ben Feynman. I'm one of the founding agents for Compass Hawaii. I'm a real estate broker and very active in the real estate community. And a lot of my clients keep asking, how's the market? And in 2023, is it going to go up? Is it going to go down? Is it going to go sideways? And so I'm going to kind of talk about the real estate side of things and what I'm noticing in today's market and what my predictions are for the future. And we'll start off with Marissa here.
All right. Hi, everyone. My name is Marissa Fong. I'm a loan officer here at the Veterans Mortgage Source. I deal with everything finance-wise. So what we need to do to get you into your home and just different strategies to make it in this high interest rate market.
And I'm Kyle Shimoda. I'm a wealth advisor, financial planner at Inpac Wealth Solutions. I help people reach their financial goals, and usually the biggest one is buying their first home, then their second home. That's also their biggest debt and liability. So I love talking with people like Ben and Marissa and hearing what they have to offer on their side, because that helps me in planning with my clients.
So this is pretty cool because we didn't talk before this at all. This is totally like live off the cuff and
Freestyle.
Freestyle, and so yeah. Where's the thing? All the industries are sort of intertwined, but just because the stock market goes way down, it doesn't necessarily mean that the real estate market is going to go down. And so I'm really interested to hear what's going on in other markets because my primary focus is real estate. But I want to know why the real estate market is doing what it's doing based on what the stock market is doing, or what the real estate market is doing based on interest rates and buyer qualifications and things like that. And so I think it's just really cool to kind of bring all the different industries together to talk about it cohesively and see what's going on. So I'll start with the real estate market, and then you guys can chime in. The real estate market activity has slowed down quite a bit. Single-family home sales are down 41% and condominiums down 28%. And the reason for this, in my opinion, is because there's just a bigger gap in the meeting of the minds between a buyer and a seller. Okay, so buyers, during the lower interest rate environment, when interest rates were like in the 2%, 2 to 3%, things were just bonkers. People were giving an arm and a leg just to buy a home, no contingencies, and it was just a really scary time to purchase a property because you can't really do your due diligence, and it's kind of nerve-wracking. Now that the interest rates shot up to kind of curb inflation, we printed a lot of money during the pandemic, and inflation kind of went through the roof. To curb that, we raised the interest rates. And so it kind of stings for buyers, just because 6 months ago they were shopping in a 3% interest rate environment, and now, what is it, like maybe?
7, anywhere between 6 to 7%, interest rate, which really cuts down on the buyer's purchase power.
Exactly.
You're talking about exactly. You're talking about people that, normally would qualify for $800,000, $900,000 homes can now only afford $500,000, $400,000 homes.
Yeah.
So that really just, puts a wrench into their plans.
Exactly. And so now you have these sellers who are looking at these prices from 6 months ago, back when the interest rate was really low, and they're expecting to get the same price. And so I have to sometimes coach my sellers. We're in a new real estate environment. The market has shifted, but prices are actually not coming down just yet. And so that's also important to know. But sellers are expecting these big numbers based on comps from the past. So my sellers who have priced were at or above those comps, those listings are now starting to sit. And when I say sit, I'm not talking, average days on the market right now is about 19 days versus in the pandemic, it was like 5 days, 8 days.
Yeah.
So it's all relative, It's not like things are just not flying off the shelves like it was before, but things are still moving. We're basically back to, 2019 levels of speed and days on market and things like that. So, but there is still that big gap because, sellers are still expecting these high prices and buyers are wanting these low prices because the interest rates just shot up a lot. And so it takes a little bit longer to have a meeting of the minds and meet in the middle, but there's still a lot of deals to be had out there. But single-family homes, median sale price up 5% last month versus last month
5%.
last year.
Oh.
So actually, single-family homes up 5%, condominiums up 4%. So median single-family home for October 2022 was 1.05 million, and for condos 520,000. So both are still kind of inching up a little bit versus last year. And I think, when we talk about real estate in Hawaii, it's totally different from the headlines you see on the mainland.
So true.
The mainland is a different animal. We're an island in the middle of the Pacific. We have nowhere else to build. We're always going to have an inventory problem here. So, what happens in the real estate market, I don't think it'll be a big shift one way or the other. I mean, obviously, I don't expect prices to double or to go up 20% like they did during the pandemic, but I also don't expect home prices in Hawaii to go down by the same amount that they just went up. I don't expect the home prices to go down 20%. They very well could go down a little bit, maybe up to 5% or so, but we just will always have a supply issue here in Hawaii. And
people want to live here.
Exactly, and that's the other side of it too. The demand in Hawaii is so high. As long as we have the best weather on the planet, as long as there's no World War III or any nukes heading our way, I think we'll continue to have demand. But not only from North America, but also from Asia, and then that adds a little diversity in our market because their markets are different from the U.S. market, and so I think Hawaii will always kind of be a safe long-term hold environment. Obviously for investors or home flippers who are just trying to do short-term in and out things, timing is a lot different. But for the normal real estate owner in Hawaii, earlier is always better, and you hang on to it for as long as you can, and that those people are always the ones who end up ahead.
Yeah, talking about Asian buyers and people coming to Hawaii, I think one little thing that's causing that uptick is people from Asia are moving to Hawaii to get them into a good private school, because these good private schools help them get into good Ivy League schools, right? We had a president that graduated from one of the private schools here, so
we won't mention that school.
Yeah, the rival for
yeah.
So everyone wants to get into that school because that's going to help their children get ahead in America. So I have a friend in LA that says he sent his kids to one of the best private schools in LA, yet he's having a hard time getting them into Ivy League schools. It would have been easier had he moved them to Hawaii and went to school here because of diversity coming out.
Yeah, I've been seeing that a lot actually. A lot of foreign citizens coming. Actually, Iolani just built a dormitory for foreign students to be able to study abroad.
Interesting. Because I thought just Kamehameha was the only one that did boarding here. But wow, that's interesting to know that Iolani is doing that.
Yeah, no, it's definitely a good point. So that's kind of what's going on in the real estate market, but I think the mortgage industry really affects what's going on in the real estate market, and a lot of it has to do with interest rates because most people in Hawaii can't afford to use cash in order to purchase property, so they have to leverage a loan. So Marissa, you can maybe talk a little bit about interest rates and what you're noticing from your clients.
Yeah, so I mean, of course, because of the higher interest rates, purchase power has gone down. So you have a lot of people that are really hesitant to move forward and start home shopping and like even just browsing. And one of the things that I always tell my clients is that, don't be afraid. Like, even though the interest rates are really high right now, if you find a house that you love, then go ahead, put in an offer, because there's a saying in the mortgage industry where it goes, you're going to marry the house, but you're going to date the rate. Because you can always refinance your rate. Every single time that the rates drops, you always have a chance to refinance it, but the chances of you finding your dream home, the home that you absolutely love, that's going to be 1 in a million. So if you're even interested in purchasing a home, wanting to see like what your options are, then get pre-approved, know what your purchase power is, what your budget is, and then move from there.
Yeah. So actually, I've been coaching a lot of my clients recently and everyone's always fixated on this 30-year fixed loan, but how many people actually on the last day of the 30th year make that last payment, and so I've been sort of coaching my
two.
You did?
I've met two.
In
my entire career.
No
I've met
ways.
2 people that actually.
Oh, I've never heard of anybody going all the way 30 years.
Yeah.
It's always like 3 or 3 to 5 years or
Unicorns.
so.
Yeah.
Yeah.
So if you can stomach the uncertainty,
Mhm.
I really think 7-year ARMs. I've been researching a little bit. Maybe you can talk about what those rates are, but they tend to be about 1 to 1.5% lower for a 7-year ARM. And I told my clients, okay, so if the interest rate goes down, exactly what you said, you can refinance. If it stays the same, that's great. You just keep going with it and let it adjust. If it goes up, you can hopefully maybe refinance before it goes up, or you can sell the property or try to pay off the loan. And so 7 years is kind of a long time to stay in one home anyway. So it's just kind of food for thought for some buyers to think about. And gives another option to them to be able to purchase a home in this higher interest rate environment, even though historically it's not very high. So
Yeah, exactly.
Yeah.
And typically people normally either refinance or sell their home and purchase another home within 5 to 7 years or so. But the main caveat is that as long as you're comfortable with your mortgage payment right now with the high interest rate, you don't want to put yourself in a worse financial situation, to purchase this home. But as long as you're comfortable with it, we're actually forecasting, the interest rates are going to dive down maybe the end of next quarter or so.
Yeah.
So as long as within the immediate future, 6 to 1 year out, as long as you're okay with making that mortgage payment, then you should be fine. You might have to cut off some spending expenses and stuff like that, but yeah, there's so many different options out there. We have an ARM program. We have the buy down program as well, where the seller actually pays or gives you a huge lump sum lender credit, seller's credit, and then you're able to buy down your interest rate as well and stuff. And so there's so many different programs out there, and until you actually reach out to a lender, a certified loan officer, you're not going to know what options are there.
Yeah, and actually I've been using that tactic a lot in our offers recently is raising the price by $20K and getting a $20K seller credit so you can buy down the rate and help with closing costs. It really helps the buyer and for the seller it's a wash because that just gets netted out, and so it doesn't matter for them. But for the buyer, it really helps to have that money up front to pay for the closing costs and to buy down the rate versus and having a higher purchase price. And it works out better for the buyer. So that's another tactic. Yeah, we've been using to get some properties in escrow.
Yeah, because $20,000 additional purchase price over the course of 30 years is only like $1 or $2 more on your mortgage payment versus having the higher interest rate, which is going to affect your monthly payment every single month. So
you guys mentioned the ARMs and the possibility of the rates going up or down or staying level. Usually with my clients, where I go is, okay, what's the probability, right, and what's what could possibly happen to you financially. So when we run financial plans, we often run at least 2 or 3 scenarios, right? So I would run one scenario, okay, rate goes down, what do we do? Can we refinance? Now what's your budget? What can we do with that money? Save it, invest it for your kid's future or early retirement. Now if the rate goes up, can you still afford it? And if not, what can we do today? What can we invest in now? Or what can you do maybe in your business to increase your income so that you can afford that higher rate? And what's the max we can go to? So that way at least they have peace of mind knowing that, okay, if rates do go down, great, we're good. If they go up, this is what we can afford.
Yeah, so I think a couple months ago, most of my clients were getting about 6 to 7%. A lot of my clients now it's actually a little bit lower, like 5 to 6% in terms of interest rate. So I think the Fed said that they're gonna maybe stop raising the rate for now. I still think inflation maybe is still out there, but inflation was kind of out of control during the pandemic. Bitcoin was at 68,000. Now today it's what?
Oh really? 68,000?
Yeah, it was not. Yeah,
oh,
now it's at like 16,000 or so. All my friends were buying Rolexes and selling Rolexes. The price of everyone knows gasoline shot up, but gasoline, so everything's kind of coming back down a little bit. Gasoline's back down and stuff like that. But in terms of the Hawaii real estate market, we don't see as much of that, those fluctuations as some of the other markets, and like NFTs were going crazy. People were trading like anything and everything. Basketball cards and all kinds of stuff.
Pokemon cards.
Yeah, and then, but it's good to know that, especially with real estate in Hawaii, it's a lot more stable, and it still has the ability to shoot up as well. So.
And it likely will, even if it does come down or plateau over a long period of time, it'll go up in value, right?
Mm-hmm.
So even if the rates don't go down and get stuck with a higher rate or it goes up quite a bit, if it's appreciating in value, property's appreciating in value, and you refinance even at a higher rate and you extract some of that equity, now you can go buy another property, maybe an income producing property, right? Or retire early. So so it's I think in terms of the big picture, a lot of it has to do with the rate and what's the projected increase or decrease. Yet you got to take into account that appreciation on the value of that property in Hawaii and how you can use that in the future.
Yeah.
And like your statistic that you just said, single family homes are increasing 5% over the past month, right?
Yeah.
So that basically shows right then and there that, even, despite this high interest rate market, the value of the properties are still increasing. So no matter what, like the best time to buy is right now.
That means that if you had $1 million home, 5%, the property grew by $50,000 in a year.
In a year, yeah. So it's last year versus this year's is it went up 5%.
Oh, sorry.
Yeah.
But still, I mean, like it shows just statistically, you have empirical proof that investing in a home and a property here is always going to be,
Yeah. So we kind of went over like the real estate market and what's going on there. I'm always kind of interested in like stocks and stuff, like especially during the
Same
pandemic,
here.
all my friends were like, everyone had a Robinhood account and were like doing their own trading. GameStop, ride it to the moon, all that kind of stuff. And now I don't keep an eye too much on the stock market because I like to focus on one thing at a time. I don't want to like spread myself too thin. So, but I have heard that a lot of stocks are like way down. And so, yeah, what are you saying more on like the finance side of what's going on and when people ask you how's the market?
How's the market? It's great. It's doing what it's supposed to do, right? And I think how like a real estate market would adjust, right? Interest rates would adjust. The stock market is adjusting. I think it's been overinflated for many, many years, and it's coming back to what should be the normal. Now, tracking individual stocks would be like tracking individual properties. Like I don't watch in that much detail how each individual company is doing. Yet as a broader market, the market's doing exactly what it's supposed to do. And we go in these cycles, bears and bulls. So we've been in a bull market for 13 years, one of the longest bull runs in history. And so this bear is a little overdue. In bear markets, right, so we have a steep decline in the stock market lasting anywhere from 6 months to 24 months has been one of the longest. That means that we're going to ride this kind of downslope, this correction for a little bit, and we're going to come back into a recovery and a bull, right? We always go through these cycles. So in terms of like investing in property, like if you're going to buy your forever home, right, then get the home you want and hold on to it, right, regardless of what the rate is. When it comes to investing, if you're investing for the long haul, like your retirement, right, is it the best time to invest now? Absolutely, if that's your account that you're going to hold for a long time because the market always comes back.
So what would you say to clients that, are like right on the ledge, and like they're super worried about, their financial portfolio and they want to, cash out at that moment because they're just like, I can't lose any more money. What would you say to them to talk them off of the ledge?
I would first ask them, like, what's that account for, that money for? Like, if that's their deposit for their condo in like 6 months to 2 years, maybe we should reallocate, maybe move it to cash possibly, right? Because that's money you're going to need pretty soon. If that's your 401k or Roth IRA and you're in your 30s or 40s, you're not going to touch that for 20 plus years, leave it alone, right? Maybe make some adjustments to the type of portfolios, maybe less growth portfolios, more value at the moment, yet do not move into cash. That's the worst thing you could do because now you're realizing that loss, right? So you've had unrealized losses, yet as soon as you move to cash, you've realized the loss.
Yeah, and I think everyone sort of has this opinion nowadays because things were going so bonkers during the pandemic that they automatically assume there's going to be a crazy crash coming up. And I always ask them, what data points are you're just going off opinions, you're going off a hunch because things were so bonkers and you think everything has to crash, and that's not always necessarily the case. Like, I'm not saying that prices aren't going to come down for real estate. They very well could, but I'm not, when you talk about a crash, do you think housing in Hawaii is going to go down by 20% in 1 year? I just don't see any data to support that. It could very well go down 5% maybe, but I can see it easily just flatlining for a little bit and then going back up. I think, especially in Hawaii, because home values went up so much, people are sitting on so much equity in their homes. It's not like the last financial collapse where people, all the banks, they all folded and everyone had to sell and money was really tight. This is a total different sort of recession that we're in. People are, especially homeowners, are sitting really pretty. They have so much appreciation, so much equity in their homes, and so.
And actually, this is the highest savings rate in history.
Yeah.
Right. So I forget which study it was. I think it might be Merrill Lynch, Morgan Stanley, where they looked at the average savings rates of Americans. It's double what the average has been for like the last 100 years.
Yeah.
Right? So people are sitting on more cash than ever before.
Yeah. And so what I am kind of telling my clients too is, like, I think you brought it up in the finance market. It's a more normalized market. So. I'll bring up a couple of other data points real quick for the Oahu real estate market. Single-family homes, median days on market was only 10 days last year, and this year is 19 days. And that's actually the same for single-family homes and condominiums. New listings, though, way down for single-family homes. There's only 285 new listings for last month. Last year was 376, so that's down 24.2%. A lot less single-family homes coming on the market. Condominiums, same thing too. New listings are down 25%. So you're not seeing as many people put their home on the market right now. And actually, a lot of those owners are opting to rent out that property instead of putting it on the market to sell because they're not getting the price that they want. And so I think the rental market is actually maybe a little bit better right now. Yeah, because it's easier to find a rental property because they're opting to rent it out rather than sell it.
So Ben, you had mentioned the amount of inventory, and I know there's like some metric you guys use in terms of like how many buyers and how much inventory is coming on. Like, what's a healthy market?
Exactly. So 6 months of remaining inventory or more, it becomes a buyer's market. 6 months of remaining inventory. 6 months of remaining inventory or less is still a seller's market. So Hawaii has actually been a seller's market for the last 20 years. Only in the 80s and 90s was it a buyer's market. But we've been in a seller market territory. It's been under 6 months of remaining inventory in Hawaii for the last since the early 2000s. And so the secret's out on Hawaii. We have a lot of global exposure now. People know that we have the best weather on the planet. People are wanting to come here.
Mark Zuckerberg is buying everything.
Exactly. You got all the tycoons coming in. So I just don't see it becoming a buyer's market. Maybe ever again here in Hawaii, just because especially on Oahu, we've kind of reached our limit almost. I think all we can do now is build taller. Yeah. Kaka'ako is pretty much all spoken for, so.
That's so true.
So yeah, I had one listing out in Kailua, and it wasn't really selling, and I thought we priced it pretty well, actually, based on some of the comps, but it was just a little bit beat up, and it wasn't really move-in ready, and I made the photos look really, really nice, but when you go in there, there's still a lot of work that needed to be done. And that's another interesting thing, too, that even though it's such a seller's market and inventory is so tight, I'm noticing buyers are only wanting like major move-in ready type homes, like the ones that are super renovated, and obviously you're going to pay a premium for something like that, but the properties that I have that are like super renovated are getting like multiple offers off the bat, but ones that are kind of in the middle, they're not really, that there's still things that need to be done, they're sitting. And I think buyers are not wanting to work with contractors right now. I guess the supply chain's a little messed up. Things cost a little bit more to renovate, and especially building permits are taking forever. So they don't want to. Yes. They don't want a home where they're going to have to get a permit to make modifications to it.
And are they renting and paying a mortgage somewhere else, while they're waiting for their new home to get renovated? Right.
Yeah.
They got to carry.
That is a great point.
Yeah. So this home needed some work, and so it was kind of sitting, but I thought it was priced pretty well. And so I had to kind of think out of the box because, the property was vacant and my seller's still paying the mortgage and the maintenance fees and the property taxes. So I said, okay, so I sent out a postcard to everyone in the building, and nobody responded back. I thought people in the building would probably be the ones who might know someone who wants to move
Did they
into
respond
the
to
building.
your pretty face on that?
I know, I should have added like a gift card on there or something.
I know, right?
Yeah. So
cookie.
I went through my Rolodex and I was trying to think, okay, what clients do I have that might want to purchase this place? And I remembered I sold a unit across the street to one of my clients, and he recently got married, and I thought, oh, maybe that space is maybe they're outgrowing that place a little bit, and so. And he's sort of a contractor, so he likes to fix things up. And so I reached out to him and I said, hey, you got to come take a look at this property. Like, I think it might actually work for you. It's a little bit bigger, and give you another project, something new to do, something fun. And he looked at it and he's like, wow, yeah, this has got a lot of potential. And so I ended up finding the buyer for that, and then also to help out both sides, reducing my commission, and just to try to make it a win-win and make everyone happy. And it's sure a thing. It worked out, and. Yeah, I'm excited to see what he does with the place.
Oh, awesome.
It's a good thing you had the Rolodex.
I know.
Going old school.
Yeah. So how about, let's talk, like, I guess, in our personal lives, like, are you starting to, not go out to dinner as much? Are you feeling that tightening
That's
a
a result of having 2 kids.
Okay.
Yeah.
Yeah.
Marissa, you'll experience that pretty soon. So get all the dinners out that you can. Yeah.
Well, actually, right now we're not only renovating our home, but we're also trying to sell my parents' place so that they can purchase my place. So, I mean, with everything that's going on, we're really, really tight on funds right now. So, I mean, even before baby comes, we haven't really pampered ourselves so much as, like, in terms of going out, doing all these different events and whatnot, just to try and save up as much money for the renovations. Because, I mean, I'm sure you know that there's so many different expenses that come up just like last minute, things that are just like, oh yeah, the pipe is broken on this, one room, and we have to redo everything. That's an extra $5,000, extra $10,000 here and there, and stuff. So, yeah, I mean, it's definitely, we're feeling the effect of it, because we're trying not to go into like our stocks and our investment accounts, so we're trying to use as much, our cash and credit cards and everything.
Did you do a baby moon?
And I really, really wanted to. That was like the one thing that it was like my goal to do like this whole entire year, but then because of the renovations and the cost, it was easier just to use that funds towards putting in ACs in the house versus
that'll pay off much more.
Air
conditioning.
Exactly. But I mean, I've been so jealous of everyone that's been going to Japan, Korea, China, everywhere. Just like I want to travel. I want to get off this island.
Yeah. But saving money, especially in Hawaii, is so important. Saving money is the same thing as making money. Like I know some people who make a lot of money, but they're just spending so much that they're ending off in the same spot.
I've met many of those people.
Yeah. So it's really important. I only learned this kind of recently, more so how to learn how to save. So it's tough.
Mm-hmm. Yeah, and when people ask me like how should I do a single family home or a condo, and I say, well, what's the question? Like, what are you worried about? And people say, I don't like that maintenance fee. It's so high, right? And yet the nice thing about having a maintenance fee in a condo is you really don't have to worry about anything. Like the condo takes care of like, the grounds and like if a pipe breaks or whatever, right? There's certain things you have to cover as the owner. Yet in a single family home, it's very expensive. Like if I had to calculate what my maintenance fee was as a monthly cost, it's like thousands.
Exactly. Yeah. People take that for granted. You got the yard man, you got the pool man.
Oh, that's the small stuff though, right? Like I had to
to
replace the roof.
Yeah.
And then my wife bought a Tesla, so now we have to upgrade the electrical and put up solar, right?
Yeah.
So then now we got to put the permits in 6 months out. There's $20,000 in electrical and then $80,000 in solar, right? So I mean, obviously it's going to improve the value of our home, yet these are costs we got to save for.
Yeah. So hard to save, but it's important. Let's go with a couple, I guess, predictions for 2023. So I guess I'll start with the Hawaii real estate market. My prediction, I think interest rates will probably stay about the same, hover around 6% maybe, plus or minus a percent or so. I don't see it going too high or going much lower. I think home prices might flatline a little bit more. I think versus last year, we've gone up about 5%. I see it sort of just kind of flatlining. I don't necessarily think that we'll go down. I'm not seeing maybe like a whole lot of appreciation, but who knows? That's kind of just my own opinion on the Oahu real estate market, which is very different from I think what's going on in the mainland and things like that. And so I don't know. What are your thoughts for mortgages, loans, interest rates, all that sort of stuff?
So according to my boss, he believes that by the end of the first quarter we're going to see like a dip in the interest rates. majority of the rates are around like the 6 to 7%, but it's probably going to be around, hopefully, lower fives, maybe even to like the fours or so. But we definitely can't sustain this market like with these high interest rates at 7-8%. It's not feasible.
Yeah.
So definitely, maybe the start of first quarter, leading into second and third, there's definitely going to be a turnaround time by next year for sure.
Yeah, cool. And Kyle, I know you're not allowed to give opinions or advice or anything, but what are your thoughts?
I would say my prediction for 2023 would be the best time to invest in your accounts, best time to invest in yourself, best time to make a shift in your career, whether if you stay in your industry or to another industry, because a lot of things are going to change.
Yeah.
So I think being ahead of the curve next year is going to be the year.
Yeah, I'm actually looking forward to a little bit of a slowdown because I've just been working nonstop, going to events and hanging up, just too much nonstop, and so I'm looking forward to a little bit of downtime where I can just kind of watch movies at home a little bit. I miss doing that.
Pandemic time?
Yeah. Yes, exactly.
Maybe make it time.
Baby making time for you.
Yeah. We'll see, one thing at a time. Sounds good. Well, thank you guys so much for giving your spiel on how's the market. And whenever we go to parties or events, everyone's always asking what's going on, and so I think it's important to have these discussions to look at it from different perspectives, from different industries, and how everything sort of ties in together. So if you have any questions specifically on the real estate side, you can reach out to me. My website's www.fineman.com, or you can find me on Instagram at Ben Fineman. And how can they find you?
Yeah, so you can call or text me at 808-469-2256, or email me marissa.fong@celebrityvms.com. And yeah.
You can reach me, you can go to our website, dreamplanlive.com, dreamplanlive.com. Also, contact my office line, 808-784-4092.
Right on. Thank you guys again for hosting How's the Market Hawaii, and we'll see you guys on the next one. And until then, happy hunting.
Thanks, Ben.
Take care. Bye-bye.